Check, check, quick sound check. Can everybody hear us loud and clear? What's going on, Coach Paul?
I hear you loud and clear, Coach Jay. How are we doing on CPI day?
Happy CPI Tuesday. Inflation data is out. Half of the inflation data that we're looking for, maybe a quarter of it. We get PPI tomorrow, but we do know that the CPI numbers came out today. Audio, video looks good, sounds good. We are good. Thank you for that. Welcome to At the Buzz, our market recap. If this is your first time here, the goal of this segment is to review what happened in the markets for the day. May talk about some markets that you have not traded before, but we believe our goal as traders is to identify opportunity. We want to take advantage of those opportunities while managing our risk. If this is our first time meeting, I'm Coach Jay. It's definitely not our first time meeting, but I'm Jay anyway, just in case it is. Been trading for the past 13 years and in the futures markets for the past 6, and that is Coach Paul. Coach Paul, go ahead and introduce yourself. I'm going to take a phone call really quick.
Okay, I'm Coach Paul. I've been with Topstep since April of 2023. I've been involved in the futures trading industry for 4 decades. I'm here to share some experience, some knowledge, and hopefully help you on your journey to be a better trader.
Awesome stuff. Thank you for that, Coach Paul. That was Dakota calling me, so I'll call him back in a little bit. He obviously doesn't watch TopstepTV because he should know that we're doing At the Buzzer right now, but
yeah,
sometimes money calls, right? Dakota was calling there, but we'll call him back. Greg B says, we scared you. You didn't know you had YouTube still open. Greg, thank you. You are all our chat, our audience. Thank you for joining us today, as always. Haven't done so already, hit that thumbs up, that like button, tell your friends and family to subscribe. Let us know how you did in the chat. Were you up on the day, down on the day? Did you stay flat for the day? What you traded, and we'll get into the news. So we had some planned headlines come out. We had some bank earnings, BlackRock, JP Morgan, Wells Fargo, all reporting earnings. It sounds like they all beat on their earnings. I didn't pay too much close attention to it. But with the beginning of earnings season looking pretty good, we did have CPI year over year come out at 2.7%. Forecast was 2.6. Previous was 2.4. Month over month came in at 0.3%. Forecast was 0.3% for month over month, and previous was 0.1. Core CPI year over year came in line, 2.9%. Forecast was 2.9. Previous was 2.8. Core CPI month over month came in at 0.2%. Forecast was 0.3. Previous was 0.1%. Bunch of other things going on today as well. We had some Fed speakers. We had President Trump speaking at an energy event. We had I think it's crypto week this week as well. So there's a lot going on. Anything you have as far as the news goes, Coach Paul?
No, the CPI was within reasonable expectations. A little higher, but I know it's also still higher than the previous by 0.3. It's concerning, and we've talked about. I believe the PPI in this case is more important. Seeing the prices of copper, platinum, and other industrial metals skyrocket this last month. So,
if the producers are paying more, the consumers are probably going to be paying more.
What? They're not going to eat that?
I don't know if that's how that works. That'd be a nice thing to do, but I can't imagine that's how it goes.
Well,
prices of lemons went up. The lemonade is more expensive.
It's just the way it is. On your lemonade stand, if you're paying a dime for lemons, you were paying a nickel for last week.
Right.
Price is going up.
Exactly. Or
you won't stay in business.
Giving out juice for free. All right. There are 35 different markets we can trade with Topstep accounts, and today to the downside, we had silver down 1.8%, the Russell down 2.1%, and micro Bitcoin futures down 2.91% for our biggest percentage mover to the downside. To the upside, we had live cattle up 1.49%, micro Ethereum futures up 1.59%, and natural gas up 1.79%. Because micro Ethereum snuck its way in there, I'm taking that off the list. Nobody trades that. We're taking it.
Well, it's nice to know. We just won't trade it.
Lean hogs also up 0.73%. Kiran says, "Can we get live cattle to go down so I can buy steaks again?" Kiran, I have some steaks in the freezer, and they're just gaining value as price goes up. I might sell them on the free market myself and see what we can get return for them because I bought them a little while ago. Coach Paul has an echo.
Echo.
Should be
Checking.
fine. Should be fine now. Should be good now. All right.
All right.
Best trade of the year might be the ribeyes that are in.
Well, they only last so long in the freezer.
Yeah, exactly. Get rid of them before start losing value. We had crude oil in our big four down 0.49%, the S&P down 0.55% after making new all-time highs. Gold down 0.71%, and the NASDAQ down 0.007%, also after making new all-time highs on the day. I have a NASDAQ chart up here on a daily. We got some news last night out of Nvidia. There is a meeting between Nvidia and China today. News that we got last night that kind of ran us to all-time highs to start was that Nvidia was going to be able to start selling GPUs in China again. We heard maybe a couple weeks, maybe a month ago, that Nvidia was not going to be allowed to sell in China. That seems like that is no longer the case, and we know how heavily weighted Nvidia is in the equity markets. 11% of the Nasdaq. We saw the Nasdaq make an all-time high last night on that news. Coach Paul, what are we looking at here on the daily in the Nasdaq?
Without what was Nvidia up on the day?
At one point, I saw it was 5%. I'll pull up a trading view chart and take a look at it. But chat, somebody in the chat might know. But chat, what was Nvidia up today?
Chat knows everything.
They know everything. At one point, I believe it was 5%.
Okay, so without that, I think there's a different chart. That wick in the all-time highs, and we can't escape this range. We haven't, in other words, we haven't closed above it. And so back into the range, still friendly, but the NASDAQ was completely different than our friend Rusty or the S&P. I don't like the way this is acting. But what I don't like and what the market's doing can be two completely different things. But I think that wick, is that a hammer?
Yes, it is.
I don't think that's very friendly. I don't. It just feels heavy. Maybe it's because I was trading S&P and Rusty and not the Nasdaq. But tomorrow is a big day. Looking at that, well, I think we go back into this range and eventually test the 20-day moving average. How about, what do you see, Coach?
20-day moving average is down at 22,653. See a market that's making all-time highs reluctantly. It is, maybe that was a blow-off top move. That is a pretty ugly rejection on the daily candle there. Maybe a healthy pullback is what we need here in order to make some new room. But again, we're saying this on a day where this market made a new all-time high. So I'm reluctant to get like super short and say the trend is over. But today provided a great opportunity. We'll take a look at those trades in just a minute here. Let's go down to a shorter time frame. Take a look at the half hour that opened trading last night. Dakota and I were doing slow markets, and with CPI numbers coming out, we were kind of just hanging out with Coach Paul. We were talking about, can you, having the conversation, can you make trading a living, day trading a living? And then all of a sudden, this Nvidia news drops out of nowhere, and like caught us off guard. And it's like I didn't really expect to be placing a trade tonight, but you always have to keep your head on a swivel. You never know when a headline is going to drop, and we can see it when we go down to a 3-minute time frame. The markets were chopping around near that 23,000 level, and volume kicks up. Get 10 times the volume average in a 3-minute candle here, and really strong move, about 150 points in 15 minutes.
and you look at that volume,
Mm-hmm.
and that for a night session,
It's huge.
that's a massive. But really was almost the high of the day if we look at, I mean, it really, that was it. We tried, we struggled above it. Um, but I'm not trading NASDAQ right now. I went
Okay.
out to grab some food and came back. I'm like, oh,
What
how did
happened?
my chart move? I was not like, this is a day session and I was kind of thrown off.
Yeah.
I didn't know the news. It didn't really matter. But once again, if you were short and you didn't put a stop in, you're screwed.
You had to stop at some point. Probably.
Yeah, well,
Probably not where you wanted it.
yeah, could be a DLL
Right.
involuntarily, but um, no matter what session you're in, like I said, you never get comfortable in just walking away. I know that some people do it. I know I used to do it, but quite a move on a 3 minute.
Yes, it was. We talked about this a little bit during slow markets last night. Can you plan for knowing that Nvidia was going to drop that news in China? Can't. Uh, I can't. I don't. I don't. I've never found a way to know, or I never signed up for the right mailing list that knows when those headlines are going to drop. But if we take the same approach that we do to every other high volume event, look at what VWAP did. We left that range pretty early. Dakota and I, we talked about, how can we approach these. It's a tough trade to take. I don't want to make it seem like that's an easy trade, but we did get a trade, and we talked about this one towards the end of slow markets last night. Did get a J trade at these highs. We picked this candle here, which was the highest volume. Up at those highs. Do you know that's the high of the move before it's the high of the move? You don't. But once we close below that, that gives us some information, right? And we look at this trade all the time. It had a pretty nice short. I wonder if anyone took this short. I explained this trade at the end of slow markets last night, but a really nice sell-off, 100 points there, where we eventually came right back to that range of that high volume. Anything else you got on the overnight, Coach Paul? I do want to go over the trade that I took during fast markets. On the overnight.
No, that's we've covered enough, but the volume was incredible.
Yes, it was. Yes, it was. All right, let's go to the New York session. I know, Coach Paul, you took a short in the S&Ps. We want to talk about that one as well. CPI candles, this one. Then we have the New York opening range, which is this red one here. I was only looking for longs. I said I was okay losing money to the long side in this market. It's been in a very strong uptrend. I kind of ignored signals to the downside, but there were big enough ranges in this market to trade. We got on a 3-minute chart here. We have the CPI candle low, which is this 23,150. The trade I took, guys, I was just looking for selling to stop. Where we had a really nice breakout to the downside. This looked very similar to yesterday's open, where we open up, we spike up initially and then sell off 100 points. I was just looking for where that selling was going to stop, and to me, it made sense, kind of somewhere in the range of where that high volume came in at the highs of that Nvidia move last night. So when we peak below this and pop right back into it, I consider this failed selling, buying somewhere in this range, stop below the low, and just going from there. It was a position, and I'm going to keep trying to do this, but adding 2 trades. I took a 1 lot initially, got up to a 3. I only went to, I want to focus a little bit on the execution of the trade. I only went to a 3 lot after I had profits secured on the initial position. So by the time I scaled up to 3, there was no way that trade was going to be a loser. It was either going to be a $50 winner or whatever was available for the rest of the trade. And I think that, to me, if I'm going to scale up into a position, it makes it a little bit easier, kind of. And Coach Paul, you talked about this. You know, thinking in units with your trades, and I'm not putting the whole bet on before I know what cards I have. And again, that's all your phrasing there, Coach Paul. I know you talk about the book thinking in bets. That's the idea there, where once I realize I have a good hand and then I can see the flop, now I'm adding to that bet. And it works out in that case, right? Where I could put a 3 lot on, take all that risk initially, and it just be the wrong trade, putting on a 1 lot, and then saying, okay, this is going the way I want it to, adding from there, just gives that added confirmation to hold on to that trade. Uh,
Nice.
Thank you, Coach Paul.
Um,
I'm
like you
listening to you,
said,
man.
well, you know what? You might have said something really, I think is really important, especially for newer traders. You just didn't put 3 on because that's a different risk.
Yep.
You let it go, you added to a winner. If we're over leveraged on the first one, and because we still don't, I always consider putting on it's 50-50.
100%. Yeah. There's
It's
no
either going to
guarantee.
work or it's not.
Yep.
Sometimes you get into it. It's an 80% trade. Well, 80%, there's still 20%. Why I bring up 50-50? Because then it helps me accept the uncertainty that's in front of me. But you got in, it was working, you felt good, and then you added from there versus just putting on 3 and not being able to take any kind of heat. So nice job.
Thank you, Coach Paul. Thank you. Yeah, I think that to me that's the comfortable way to do it. There's some questions in that. Is your way of gauging that simply whether or not your stop will remain in profit after adding? End slug a little bit, right? I'll try to explain a little bit more when we're doing it in person. But what I'm reading once I start to add are areas where, and maybe I'll clip up the video and kind of recap the trade. But there was a pullback that I was willing to give the market, and it was basically 50. You can see this high volume candle that we have marked out here. Uh, if you realize where I added to this position, it was once we cleared above this 50%. Right, so we cleared above 50%. My stop can still go below this, and I would be in profit. And I'm giving 50% of this candle the room to hold. So when this pulled back and that 50% held, I'm adding on the way back up when the market said it's not trading here anymore. Uh, So I just want to go with an area of invalidation. It doesn't necessarily have to mean my stop is going to be in profit. There's sometimes I'm going to add and I'm giving back some profits. But as long as my stop can be below an area of invalidation, I tighten this trade up a lot. But the idea was that, hey, we rejected at these lows. We were going to keep going. New area of invalidation becomes at this point, and was I willing to give back the profits to maybe add to that trade? Was that decision? Am I a Knicks fan? I think I have to be, just by nature of being from New York. Um,
What did you do with my guy, Tom Thibodeau? What the hell?
I mean, Mike Brown's a great coach. I don't think Tibbs deserve that though.
No.
But
But he's going to get paid.
I'm sure, yeah, he's going to get paid somewhere. We rejected, so where we pushed up to, and I took that trade off, and we talked about it while this trade was happening. There wasn't a ton of size at 23,200, and we can see 23,200 was right around 50% of that opening range. On that long, I'm looking at this and saying that this market needs to trade above 23,200 for us to continue. It's right around 50%. Not a whole lot of size there. So if buyers are that convinced, they should be able to push it higher. But now we're going to go over to kind of Coach Paul's trade. I know you traded in the S&P. This was signaling a short for the day. So let's go over to the S&Ps, Coach Paul, because they look a little different.
Yes, they do. Well, we talked about letting the number happen before we make trading decisions. So let's frame out the first half hour of the CPI candle and tag it. So we had a nice move. It was lots of buying. It was big, but decent volume. And from there, let's tag out the first 3 minute. So keep that on there, and then we'll go to the 3 minute chart. Let's see how the opening comes out. So I found this is where we left the range. early with urgency. We tested that price from the initial reaction. We tested it well, can you call up Coach Dakota and see if this is a 3-bar reversal?
I think he's gonna say yes. We tested up towards those highs. Yeah, I mean that's a
Yeah,
rejection
couldn't
of
settle.
these
We
highs.
just, huh?
No, I said we
Yeah, and
had
I
rejection
wanted
up at
to,
those highs.
yeah, and I'm looking to buy it now on a day trade. I give myself a little more room than my swing trades. I, we just said we just, new information came out, and then that second we left early, that opening range, and it was nothing but selling, and VWAP left.
Yes, we did.
That was complete failure.
Yeah, it was interesting because at the time, I think on the open, the NASDAQ made a new all-time high. Because that CPI candle ended up being what was the all-time high. The NASDAQ traded above that. The S&Ps couldn't at all. And if we look at that volume from CPI never left the range, right? We talk about this being range-bound markets all the time. And then you get more volume coming in and they completely disagree with where price is. On the subside, it's
Yeah.
a great short.
Yeah, I took a 2 to 1, just a couple micros. Remember, I I wanted to buy this.
Yeah.
So we talk about not having a bias. My bias was to buy it, but I got information to say, okay, the buyers failed. Um, I didn't take a big position, 2 to 1. But what I didn't do is stick. I let new information come in and made a decision to sell it. You know, it kept on going, and I just think that's really kind of ugly for the near future. I mean, they have reason to go. There were some outside influences too. Bonds
Okay.
just ticking down. The treasuries are just breaking. But what does that matter? I'm focusing on the price and volume in this particular contract. That gave me the evidence. I took the trade, um, and was happy with it.
Give me one
But
second. Got to take a call.
okay, hope it's Coach Dakota telling us it's a 3-bar reversal. But two things setting that up was that big candle from the news, the CPI, the news event. We couldn't break that high, let alone close above it. And look what the volume was on the first 3 minutes. Heavy selling, followed by heavy selling. And VWAP leaving the range. We're right near the lows as we speak. We're actually under the 200-day moving average, 200-bar moving average on the half hour now.
We really. I'm back. That was my mom. I had to take that one.
Oh, you
Yeah,
best take that.
can't hang that one up. Can't hang that one up. But yeah, we are under that 200 moving average. Yes, we are. We spent some time down there yesterday as well.
Yeah.
Give me a
Let's take a
second.
quick look at the daily. Which is
At 20.
a little different than the NASDAQ. We're still in that range, but we're flattening out at all-time highs. That's not healthy. I think the next big event is the 20-day moving average. I think if we get an ugly number tomorrow, we could have a decent down day.
That 20 moving average on the daily in the S&P is down at 62.12. 62.12. We got a question here. Dante Sweeney, do you look at the J trade volume candle in both directions or the direction of the color of the candle? Dante, we'll look at it in both directions. Just remember, right, with these candles, it really depends on the time frame that you're looking at, right? So you might get different information. Let's go back to the Nvidia candle, for example. In the S&P, that 3-minute candle ended up being the highest volume kind of around here on the 3-minute. If we look at the NASDAQ around that same time frame, the highest volume ended up being the next candle. So it's not always going to be perfect. And I wouldn't try to, especially if we're talking about shorter time frames, I wouldn't try to switch between a 1, a 3, a 5, a 2-minute to try to find which one is perfect, because none of them are going to be. The concept remains the same though. In some cases, like this one, this 3-minute candle in the NASDAQ gave you a better entry here than waiting for this one. But the concept is still the same, right? And that's why I think it's important to wait for confirmation. We were explaining this trade yesterday in the slow markets chat, and somebody says that's hindsight trading. You don't know that that's the high until it's the high. You're right. But we're also not trying to figure out how to sell it at that top tick.
Wait, right there. That is. I want to reiterate that because I've said this and understand it. You don't know. You know when the high is in? After it's made.
After it's made.
What I got stuck is trying to sell the high on the way up.
Yep. Which one do you pick? Is it that one? Is it that one?
If I had my 1999 2000 account, you would see me doing that all the way up. This time for sure. By the way,
it's got to be this one.
Eventually, I blew out, and it was not there for the big break.
Usually, what happened to me in that case was I sold it on each one of these candles. Finally, I get stopped out. I can't take any more for the rest of the day, and then it turns.
So there, I mean, that's why volume is really helps, because this buy volume higher, buy volume higher, buy volume higher. And I call that allocation. There is an entity buying it and not getting out. So I put that it's commercial. They're buying it and they'll buy more.
Yep.
All right. The key part is, instead of, and I learned this from Peter Stottlemyre, try to identify the last buyer.
Yeah. Usually when some good sellers start coming in.
Of course, he didn't tell me how to do that, but it helped me a lot. Is that I stopped trying to sell into heavy buying. Now, what we have 1, 2, 3, 4, 5 consecutive buy candles.
Yep. Consistent volume too. Increasing volume.
Increasing volume. Then we get a selling candle. Okay. That's the first sign. It's not, and there are no absolutes. It's the first sign that the buying stopped. The beauty with anchored VWAP is you can put an anchored VWAP there and start to frame out a risk. So if we anchor on the first selling when the buying, yeah, I love that. Keep doing that.
Hopefully that's not confusing to you guys, but can you see that? Where all that volume starts to flatten out? That's what we're looking for that turn. Once we start closing below some of these, especially if we're closing below some of the anchors from prior candles, decent sign of a potential reversal.
Yes. So I hope that that helps with that. Is, how do you know? You don't know that. Absolutely, you don't know. But look for a sign that the buying or the last buyer is bought. We just gave an example. It doesn't always work, by the way, but it's a good indication. And possibly a good place to take some risk.
Yep, absolutely. So Dante, hopefully that answered your question. That trade, that reversal trade, can happen in either direction. I think we saw one in gold to the long side, so we'll take a look at that in a little bit. Let's make sure we get to the rest of these questions. What is your entry check for a trade? For VT, I'm looking for volume. I'm looking for. It depends on the setup. Sometimes there's continuation setups. That if it's this continuation setup, if I'm looking to get in here, right, where it looks like follow through volume. So first thing I'm going to look for is, did we establish a range? Two, did volume leave that range? Yes, this is a continuation trade. Is that volume sustainable? If it is, I'm looking to get in somewhere near that VWAP or risk below the low. If it's a reversal trade, looking for the exact opposite. Was it high volume? Yes. Did we establish a range? We did. Did volume leave that range, or is it trying to leave that range? And did we close below? Here, this is that reversal trade. Entry is on the close below that range. Risk goes above the high, and go from there. All right. Any other equities you want to talk about, Coach Paul, or
Oh, Rusty,
the
because
Rusty?
it's
It was heavy.
complete opposite of NASDAQ.
Yes, it was. Interest rate sensitive, Rusty. Is that correct?
Yeah.
Okay.
Yes, it is. It's more affected by interest rates because they borrow more, they float more debt, they have corporate bonds versus something like Nvidia that's bleeding cash, or Google bleeds cash. They don't have to borrow. They borrow for efficiency. But the Russell, that's a little different story. They're not bleeding cash. They might need, or most likely use the capital markets for lending, for borrowing. So with that said, that's why it's been dragging. But it's sitting right here at the 200 and the 20, and it finished ugly.
Yeah, it did.
It needs to rally back in, or probably go down to the 50, the way I look at it. But it really hasn't. It's being dragged up. We thought we cleared the hurdle, and now we settled back underneath it. Got the 20-day right there. Tomorrow's a big day for Rusty.
This chart looks like it says, "Why are we buying this shit? Nvidia's going up." So they sold it.
Nvidia's not in this index,
right? So we saw this to buy Nvidia.
So let's look at the half hour, or even the 3-minute on the opening. Let's frame out let's do what we do. We'll wait for the CPI to come out. Let's see what CPI was. Oh, wow. That was just a beautiful.
Very, very similar to that S&P trade here.
Yeah.
Price peaked above. It priced out, Coach Paul.
Yep.
Priced out. Volume did not leave that CPI range.
Not at all. And boy, and look at that, how much volume was sold.
Yeah.
On the opening. That's kind of stunning. That was early and often, but it was the biggest one. It was like a roundhouse to the buyers. Like, boom. Like, it never recovered from that selling.
These are some of the stronger opening range trades we've seen in the equities in a little while. Sometimes this trade is just not clean at all, but I think with the data out and just kind of everything, a bunch of news coming out at the same time, it kind of lends to bigger trades here. That opening range, that 3-minute opening range, was the high of the day. We ended on the lows, and I think we kind of just made new lows as we were talking. And we're about to make new lows right now. So some days this trade is going to be way better than others. I think this is the DNA of that. Look at how quickly this VWAP leaves that 3-minute range. Some days we're going to see it where this VWAP never leaves the range for the day, right? It's usually a wider opening range. usually on a day that we don't have any data. So going into tomorrow, anything can happen. But I'm keeping that in mind as well, right? Where we have data tomorrow, the market's going to respond to it, and has the potential for a pretty big move. You definitely got a 2 to 1 on this trade. You could have however many you want to 1 if you were able to hold for that trend.
Yeah. But the key point is just measuring it, measuring the volume on
Yep.
the opening after this number. Um, we could flip it, the script tomorrow. I don't know. It's a 50-50 shot,
Yep.
but you won't know until the morning.
Don't know
Um,
until the morning.
but if the overall market's going to break, it's going to be led by the Rusty.
Down 2.2% today. Biggest percentage mover in the equities. Dow was down 1.12. We talked about the NASDAQ pretty much flat, down 0.09, and the S&P is down 0.59. The Russell down 2%, over 2%. And there was a comment, Adienka says NASDAQ was really the worst market to trade today looking at the ES and the Russell. Percentage wise, remember where the NASDAQ is, right? It's making all-time highs, kind of leading us higher. Percentage wise, we've just been seeing bigger percentage moves in the Russell. Does that always mean for from now until the end of the year the Russell's going to be the better trade? Probably not. But if it's consistently trading a larger percentage, it's more than likely going to be a cleaner move. Nasdaq pretty much ended flat on the day, which just by nature makes it a kind of a tough trade because it couldn't really choose what direction it was going in. The Russell traded 2% to the downside, and it's much cleaner, much cleaner.
Yeah, it was a cleaner trade.
All right, let's go over to gold. Clifford, we see your question about the initial balance. We will take a look at that as well. Let's take a look at gold on the daily, Coach Paul. We do it? Did we do it? Not
We're
yet.
right there.
1.5 points.
We're sitting on the edge. I don't this and picking up momentum to the downside.
Yep. And
Um,
hold on, real quick. What we're talking about, I mean, when I asked Coach Paul, did we do it? We are talking about the cross between the 20 and 50 200 moving averages. I had to move the candles because it was hidden behind there. But that 20 is getting ready to cross below that 50. And that has not happened. Let's zoom out in gold. The 20 crossing below the 50 has not happened since November, since pretty much election day. The last time it happened, it didn't really lead to much of a downside move. The market found some buyers and continued to push up. But this time, maybe a
so the
little bit
last
different.
time it happened, it was really close to the 200 moving average.
Yes, it was.
Now we're extended from it.
Yep. Extended
So,
from it, equities are rallying. Bitcoin is rallying. A little bit of a different circumstance here. What are you seeing here, Coach Paul?
oh well, we're seeing that cross is right there, and today was early. There was selling against a relatively bullish number for gold, saying we were a tenth higher in CPI. Well, it's not dramatic. Um, economics would say inflation. Gold said sell some more. Very heavy. Like we said, we had the blow off top.
85
We've
days
never
ago.
recovered from. Um, and we're turning. You know what I mean by turning? Look at that 20-day is turning down. The 50-day is turning down. Think of it as a rocket. And eventually, it's going to run out of steam and start descending.
Yep.
That's the way I see it here. Let's look at the half hour from last night and this morning. Nvidia bullish news, buy gold.
Buy everything. Nvidia's going up.
This market has been given some great, great opportunities.
Seriously. On both sides, really.
So let's go around the world, past the deck. Asia,
Buy it.
bought it early, often, nice run up, clean. That was a clean trade. Now, when I'm talking day trade, why I personally 2 to 1, if you get greedy on this trade, and this happens, especially when you begin to trade, and we're like, it starts curling back, and you're like, okay, I give it some more room because that euphoria of just getting that painless trade, you're like, I've got it figured out. At least I did that. And I've known some other guys who have done it. And then when it starts coming back, you kind of freeze. You're like, but someone described it as a child and you're taking a toy away. You start swearing and like or crying or ignoring it.
Yep.
And then it starts coming back and you give the damn thing away, or you might add to it to get to what all the other things. That's why I look at 2 to 1s on a day trade, and maybe I can find 2 of them in a day. But that thing was a rocket ship last night. There was but look what we didn't take out yesterday's high. What did we go to 50% of yesterday's range?
Yeah, let's take a look. Yesterday's range. Yep, right around there. Pretty close. Pretty close. Yep, that's where we consolidated.
Yep. And then we consolidated. Now we're going around the world. The sun is rising over Europe. Let's see how they traded gold.
They didn't really care to buy it or sell it, but we can see. So here's what we have. We have VWAP. There's 2 of them. Yellow one is going to be from yesterday's range, right? We know that there's multiple time frame traders in the markets. Not everyone's a day trader. Some people might be holding a position. So how are they positioned coming into it? We bought, but the day that we get to trade does not cross that VWAP from the prior day. A lot of chop here through London. Maybe they had all the gold that they needed to sell, and then we wait for CPI.
And so let's frame out this morning's open.
So let's take a look. Because shout out to JD and Hogue. That opening range breakout trade. We know we talk about it all the time. They
Do
talk
it
about
religiously.
do it religiously, but are there some days where they're not going to take that trade, and what might those days be? We know we have some of the biggest inflation data comes out 10 minutes after that open in gold. So the question was, do we take that trade? What's funny is if they took it, I think they got the 2 to 1 before CPI, but I understand actually they didn't, but it still would have turned out to be a 2 to 1 at the high of that CPI candle. But I don't hate the risk management there. We don't know what the reaction is going to be to that candle. Um, would I hold a position into a CPI print? I would. I can't say that I wouldn't. There are times where right after that print, I'm looking to take a trade, but it's a lot more of a comfortable trade if you can, one, establish the risk and it be out of the way for where the market's going to trade, or two, have a position that's already in the profit before the print comes out, and then you assess from there. It would have been a 2 to 1. You could make the argument. Some people might say, "Hey, take the trade no matter what," even though there's data coming out. But what's your opinion on that, Coach Paul? Because it would have played out for a 2 to 1.
I personally wouldn't take it, and I've preached it on a day trading. I don't. It's a lot of risk. No, I wouldn't. But if you want to, and you framed out, and you have good risk, what is your risk? To me, it would be 2 ATRs.
Yep.
Okay, but here's where this is the trick. You can get slippage in a big number like CPI,
Yeah, you can.
PPI, unemployment, and I'm not going to go into this story now, but I got burned hard
Hmm.
on a huge up move, and my stop didn't get set because it moved too quick. I don't go through the rule, but that can happen. So I personally don't want to trade in front of big numbers. I think let the big money, they have to be in this
They
one.
have to. Yep.
I don't. And I'm a day trader. So heroically, I've done it in the past, But after I got burned on a technicality by the Merc, I'm like, I'm not doing that again. Now that was true. That worked out. Um, but my biggest concern in that is not getting filled.
Yeah.
There's a 95% chance you're going to get filled, but the one time that 5% it doesn't, it's really expensive because what'll happen is they give you a range to get filled in. There's a Merck rule. If it doesn't get filled in that range, they put it back into the queue at your original stop.
Which could be,
Doesn't matter what the market does from there.
yeah.
Yeah. So I won't take that risk. I just won't.
Smart move. Smart
So
move. After CPI though, and this is where we say let the dust settle. Let's do exactly what we do all the time. High volume, attach VWAP to it. What happens? That VWAP leaves
we
that
get,
range almost immediately. This is a 1-minute chart. We can go down to a 3-minute.
let's go back to that 1 minute, please.
Got you.
Where you got? Is that the?
There's
What
the
did
one.
we have there? We had a J trade to the buy side.
Yeah, we did.
Now,
Exhaustion volume, close below.
now as a day trader, I let the other one let let the big boys play. But
Yeah.
we got some new information here. Now, this is a little more risk, but it's a cleaner trade.
It's a little more risk, Coach Paul, but it's hard to quantify it, but it's a higher probability trade because now we're seeing the market's reaction to what it was waiting for. Right? Where it's just like, okay, now show your hands. And then we go, right? We already got all the cards on the table. I know what I have. Now we're just placing bets at this point. And the bet is, hey, this is sell side. Let's just push it. We see that volume pushing to the downside. And again, there's no guarantee that this is going to work. Can it seem like hindsight analysis because that's what a review is? But look at how urgently this, and again, this is a 1-minute chart, so it's going to look a little bit more dramatic, but how urgently that VWAP leaves that range. And the rejection on that 1-minute candle, the market is saying we're done trading these prices. And it's a market that for the daytime session was coming off the highs. See a pretty strong rejection, man. It's a clean trade.
Yeah. So let's look at the 3-minute now. Almost the exact same chart.
Pretty close. That urgency doesn't happen the same exact way, just because 3-minute you get a little bit more information, but we can see it that VWAP instantly tilting to the downside. And sometimes people say, well, you don't know that until you do. Here's what it looks like on a one more 3-minute candle, and you keep going. Now, do I have the signal? Again, I don't have to rush into this trade either. I could wait and sell it above that VWAP, but this is showing us that the flow is to the downside. Now, it's your job to get in that flow with managed risk. Does that mean it's like, hey, the flow is to the downside, so I'm going to sell a 15 lot right here because this market's going down? Well, okay, you blow your account first, and then we'll go down without you. So you still have to manage your risk. You still have to manage your position size because there are no guarantees. But when it starts leaning that way, you can start to assume some risk. Right? This might be where I put on one, let the market start going, and then add as we leave that range.
Yeah. We can put one, we just taught 1 unit of risk.
1 unit.
In
Yep.
this case, a micro.
Yeah. Yeah.
We can add like, I don't have, I guess, I'm impatient.
Get me in there.
I have patience. I just don't have the time. But there's how many times do we see this come back towards the 50% and fail? I don't know. It's a large percentage of the time. So for confirmation, let's say you just let it go back, see if it goes test, and then the second time through. This is all on how your personality works and what type of trading you want to do. But bottom line is this market was sold off this news. It was not bought. How do we know that? Look at the slope of VWAP.
Yep.
Volume weighted average price.
Mario, this should be answering your question here. Keep going, Coach Paul.
And I would say, don't say VWAP. Go through the whole volume weighted average price, where it means something. It's the volume.
Yep.
We've done this before. I'll do a little bit of it again. Initially, someone sold a lot. So let's say 1,000 contracts. Now, who does that go to? Well, some retail, 1 and 2 and 2 lots and 3 lots, and market makers, then maybe a 50 lot.
Yeah.
Well,
You still got 1,000. There's a big imbalance there.
There's a big imbalance. Now, whoever bought it is expecting what?
To be able to get out higher.
Rise. And then all of a sudden, man, here's some more.
It's like, wait.
And now the original buyers, you got to take more, or they got to get out. And then more selling, and then it creates. Well, we had this beautiful. I covered my gold short here on this. It was a minor J trade, but it worked when we broke the high.
Nice. Dakota took this long.
Yes, he did.
Which was, I thought it was, at the time, I was just like, yeah, that's a pretty good trade. Because if we look at what was happening on a 30-minute, we traded below the 200 moving average, right? We were looking for that test. This is a market that's been above it for the day. We traded below it. Let's put a white line there. I thought this was a pretty good trade. And this is another example of you do not have to get the direction right on the day. Was Dakota right about where gold ended up on the day? No, he was absolutely wrong. Gold closed lower than where he bought it. But if you can identify a space to manage your risk and put a trade on, it was a pretty good long there. 12 points to the upside after that J trade there. I thought that was a great trade.
And look where it went to.
Right back to CPI.
And
you up?
Couldn't now. So that imbalance was really never removed.
Yeah.
Look at the size of the volume. Never took not only the price out, didn't take the volume out until late in the day. And that was the close.
Yep. Yeah.
All right.
Good
Still
stuff.
looks heavy to me. Gold looks very heavy.
Yes, it does. All right, let's answer some questions here. Did crude oil do too much today? No, crude oil didn't do a lot. So, wow, look at this daily candle in crude. What the hell is that? A range for ants?
Balance?
It's a range for ants.
What movie was that from?
Was that Zoolander?
Zoolander. That's a good movie, funny movie.
All right, so let's answer some of the questions we have in the chat. I see a couple of them. Sandard says, hard to quantify, but how much slippage is much slippage? It really depends on the market that you're trading. In the NASDAQ, while we were in April, there were 30 tick spreads in the NASDAQ. And that's probably the most I've seen it in a long time, maybe even ever. Again, those were extremely ridiculous markets that we were trading. But yeah, it really is hard to quantify. I think we saw Dakota last year hold a position into CPI kind of accidentally and got caught with some slippage to the tune of like 20 grand on that position. I mean, he didn't set a stop for 20 grand. He set it at like 5 grand, paid an extra 15. So it really is where is the liquidity on the books? Where can we get this order filled? And it's why we say all the time. And I think, sometimes we see people kind of gamify the news number, the news prints, and trade on a sim account. Those fills and sim is going to be pretty close to real. There aren't many people who are playing that game with real money because you don't know where the hell you're going to get filled, like Coach Paul was talking about. And that's why we see the order books clear out. The only people who were on the books at that time have to be there for the most part.
Yeah, someone asked me to explain the big boys, why do they have to be involved? Well, they're as a speculator, you don't have to be involved. As a dealer and a market maker, you need to be involved. Um, Remember, speculators are the grease that keep the wheels running. Um, but the speculators can choose when they want to be involved. Market makers they can back away. Now they have a commitment to being there, but instead of being 100 up, they might be I'm 10 up now. So that takes some liquidity away. That's why we see these sharp movements,
Yep,
especially in the real short term.
for sure.
So market makers have to be there. And the end users or the commercials are in it, period. Excuse me.
Shako had a question here. So is it always recommended to watch your position and don't leave it overnight unmanaged? No, that would be unfair to say, but I think it is necessary to have it's recommended to always have a stop in, right? Because you can't really choose. And it's also kind of recommended to know what the environment is, right? So if let's say I had a short on in the NASDAQ last night before this Nvidia print, um, I'm going to have a stop in on this trade, right? And my stop is probably going to be just before I know what happens. Let's say I get short right here. My stop just naturally is going to be somewhere above some market structure. So let's say I got short here. My stop's going to be somewhere up here. I may be comfortable in this short knowing here's my puzzle in my mind before that Nvidia news comes out. We have CPI coming out tomorrow. How directional are these markets actually going to get? I could see us selling back into this range before that. If the market pops above this high, I don't want to be in that trade anymore. Oh shit, Nvidia news came out. I couldn't have planned for that, right? My short was still valid if it was. And I got stopped out somewhere near where my stop was, right? This is a 20-point candle overnight. You can't really plan for that. That's fine. I think what is recommended is knowing that there's planned news on the calendar and then holding a position with no stop into that. This CPI candle kind of looks the same, right? But the price scale might throw you off a little bit. That Nvidia candle was a 20-point candle. This CPI candle is a 50-point candle. Where depending on where your stop was, we don't actually know how the volume traded through this. We know that candle low was here, the candle high was here, but we don't know what traded in the middle of this because you know that number cleared out the order books. You could have had a stop here at 23,166 and not get filled until 23,200s, which is the difference. So, you know, do you have to always monitor your positions? No. You should be able to sleep with a position on and be okay with where you defined your risk. But knowing that there's potential high volatility is a good recommendation to say, hey, you know what? Do I want to consider holding that? You can hold trades overnight, Steven. You can trade 23 hours a day, 5 p.m. Central Time up to 3:10 Central Time. Trade too. All right. Anything else you got, Coach Paul? Any other markets you want to go over?
Well, it's CPI day. Let's look at the bond market.
Look at the bond market. We are kind of at time, but that's all right. We'll just run it into Coach Hoop's class. And we send everybody over to Coach Hoop. Talked about this being heavy.
Yeah, and it continues to be heavy, and are having trouble finding buying. Most of that move came. Well, actually, we had a knee-jerk reaction to the upside and against the wind, so to speak, early on the first half hour, and it just they couldn't find buyers. This market is very heavy, and it continues. I won't opine on the debt issue, but yeah, look at that. That was a knee-jerk reaction. Heavy, well, at the time was the heaviest buying. It was almost a J trade
Yeah.
on the buy side. and we attach a VWAP.
Left the range. This is on a 30-minute. Maybe we go down to looking at these on a 3-minute. Always gets a little weird.
Yep.
Let's do like a 5 or something. A little cleaner. But here we go. That 5-minute candle. That is the news.
We go back up halfway, and look what happened halfway. No volume.
Flat VWAP rejected. Man, I said I was gonna be looking at the treasuries when that number came out, and just doing the opening call, I kind of forgot about it. But that's a great trade.
I should have messaged you. I will. I
Take
will
the trade.
tomorrow.
Take the trade.
I'll do my push-ups now.
All good.
All right.
Greg B, have a good one. We're getting ready to end it here. We had one more question from Bobby. How much capital do you really need to trade full time? That's the question. I feel you need 100K at least. How much active capital do you need, Bobby? That's a different question than how much capital do you need to say I'm a full time trader, and you know that's my sole source of income. Um, I think 100K an account can be a lot, depending on how much you're trading. Right? What are your goals for your account? That's kind of a loaded question. You might see somebody trade with $500,000 in their account. You might see somebody else trade with 50,000 in their account. Um, I think as long as you have a plan for whatever's in your account, risk management wise, right, where you're not coming in and let's say you have 100K in an account, you're trading minis one day, and then you wake up one day and you're like, "Why am I trading one mini? I have 100K. I can trade however much size I want." And you just throw on that type of size just because you feel like it. Uh, my response to that would be, how much capital can you manage responsibly? It's going to be different for every person. What would you say to that, Coach Paul?
I can't answer that in the time we have. Here's the bottom line. If you want to trade, you have to be comfortable. So that means there's a saying, are you trading to live or are you living to trade? Big difference. So to be comfortable, you have to have what? Your bills paid. You have to have some extra capital for things that come up. You have to be completely comfortable. And then you have to have your trading capital. Never should the two meet. If you're taking money out of just your trading capital, it makes it harder because you don't know when a drawdown is going to come. It could most likely it's going to come right off the bat when you least afford it or expect it.
Yep.
So you want to build an account. I would say comfortably if you have your needs met comfortably for 2 years, where you wouldn't even think about it. Then 50,000, maybe a little bit less. This is reality to live off.
Yep.
Because if you'll be forced, if you're not like comfortable, you'll be forced to take trades or size that doesn't fit into your account because you need to make money. That is not a fertile ground for good decision making. It's I've done it. And you can get away with it, but you're putting on a lot of anxiety and pressure in a pressure environment.
A high
So,
pressure environment, high pressure, high uncertainty environment. So, Shako has a good comment here. Why do we need capital or savings when we have Topstep? It's only $50 for a 50K combine. That allows us to trade, and that is why Topstep exists. Shako, that's a great point. Eventually, the goal is to either get to a live account with Topstep, or your own personal funded account. But I agree with you, Shako. Why do I need to put my own capital at risk if I can leverage a prop firm, show that I trade well, build a balance here, A lot of times, the conversation about having a personal live account is so far away from most people's reality that we don't even need to think about it. Can you consistently take payouts from a prop firm account to show that kind of earn the right to play with your own personal money? And then the question is, and shout out to Austin Clark on Twitter because I saw him post this. A lot of people say that, hey, the goal is to take money out of a prop firm to then fund my own personal account so I can trade there as well. I think that it kind of it's important to ask that question: is that the best use of the money that I make from a prop firm? I'm taking it from something that's you know low cost, high leverage to myself. I'm able to potentially 10x, 20x, 100x my investment, depending on how much you spend with a prop firm. Do I then want to take that money from a high risk thing to just put it in another high risk thing that I have 100% of control over? Still high risk. The risk doesn't change just because you go from a personal account. It actually increases once you take that to a personal account. Because if you don't have the leverage to cover your trades, Coach Paul, who's calling?
My broker.
And you got to pick up. So, golden age. Dolby says it all the time. But if you treat this responsibly, you truly don't have to use your own money to trade. You could use the money that you make from here to do something else with it. Because again, at the end of the day trading is not a retirement account. A means to make money. And potentially a lot of it. Potentially. There's still risk. All right. You got anything else before we go, Coach Paul? I think good conversation here.
I think we've covered it. And my advice is do the same thing. Let the number come out first. Let the structure come out and go from there tomorrow on PPI.
Absolutely.
Have a good evening.
Have a great evening. I think Coach Robert might be doing a class in Discord. He's actually doing it right now. Yeah, Coach Robert's doing a class in Discord right now. So if you want to check him out over there, Tech Talk with Coach Robert. I think he is analyzing traders' technical setup. So if you have some questions about your own setup, you can share that with Coach Robert over there in Discord. Coach Hoop is doing a class after that. And we have Coach Ray and Coach Vince at 6 p.m. and 7 p.m. Central Time. Dakota with slow markets at 7:30. And Aaron with the London Open at 1:30. Tomorrow is Neuro Wednesdays with D and Dr. J Jerome at 3:30 a.m. Central Time. And then we'll be back at 7:20 with the opening call on TopstepTV. Hopefully all of that with the intentions of helping you become a better trader. So if you haven't done so already, hit the thumbs up button on the way out. We appreciate you all joining as always. Andrew, thank you for helping us run this show. Coach Paul, great stuff as always. Talk to everyone tomorrow. Have a great night. See you then.
Bye.